for everybody that's on call. Welcome to today's Twitter Spaces. My name is Joshua. I'm an investment analyst at Cytonn Investments. And today we want to discuss the reports that we did last week, which was a focus on the financial year 2023 performance of unit trust funds in Kenya. And so I welcome you to this discussion. We hope to make it as engaging as possible. And if you have any questions, please stay tuned. We'll give the chance for you to ask your questions at the end of our discussion. So I'll start. Okay, before we even go into the discussion, I'd like to notify you that the discussion we're going to have is based on a report that we have done. So you can visit the Cytonn page and check out the report so you are hands-on with what you're going to discuss, or go through it as we do our discussion. Now, I want to introduce my team members, or those who are with us here today. I'll start with Christine. Christine is also one of our team members. Is an actuarial scientist. I'll just give her some minutes to introduce herself to everyone. The floor is yours, Christine.
So, hello everyone who has joined in. Thank you for joining in on the discussion. So, my name is Christine Shila Kingi. I'm also an investment analyst at Cytonn Investments, and I'm excited to talk to you about the unit trust funds performance.
Thank you, Christine. We're excited to talk to you too. We hope you'll make it exciting. Now, we also have other team member, Dennis. Dennis is an economist who also doubles up as an investment analyst at the firm. I'll just give him a few minutes to introduce himself too. So, Dennis, go ahead.
Thank you, Joshua, for that introduction. My name is Dennis Kibet. I'm also an investment analyst at Cytonn Investments. And yeah, I'm pleased to be here today to discuss the report we did. And I'm hoping for an engaging discussion. Yeah.
Thank you, Dennis. We hope we'll make it engaging. Now, I think we'll just get right into it. I even saw in our e-shot that we said you're going to do a UTF performance. Now, most people don't normally understand what the UTF abbreviation is. So it's unit trust funds, and I just want us to start with the basics. So Christine, could you tell us what a unit trust fund is, or explain to us what unit trust funds are?
So basically UTF, as Joshua has mentioned, are unit trust funds. And these are a type of collective investment schemes that pool funds from different investors and then collectively invest the funds in a diverse portfolio of assets that are managed by a fund manager in order to generate returns for the said investors. And the different classes of portfolio that the funds are invested in include maybe equities, bonds, commercial papers, and many others. And just to basically take you through the types of UTFs in Kenya. So the main one is the money market fund, which I'm sure most of you might have heard of. We also have the equity fund. We have the balance fund, and we have the fixed income fund, and some other, like the others such as the special fund. So, yeah.
Okay, so maybe we can just go through them like one by one. Money market funds, you've explained what they are. Now, what's an equity fund? What makes it different from these other funds?
Okay, so an equity fund primarily invests in stocks, but a portion of the funds can be invested in government securities, but primarily they invest in securities. These are stocks from the companies. And like if I could also just add on to maybe the difference between that and the balance fund. So a balance fund invests in both stocks and fixed income securities, and thus they offer a balanced risk-reward ratio, therefore optimizing returns, and they're basically lower risk than the equity fund. Yes.
Okay. Okay, thank you for that. So as you heard from Christine, the difference between these these funds is where the money is put. So basically, equity funds put most of their money in equities. Balanced fixed income funds put most of their investments on fixed income assets. And examples of fixed income assets include the T-bills, the government papers, the bonds, and those kind of assets. Equity funds, they're just the portfolio stocks, the listed companies. They're currently around 65. So equity funds invest most of their money in that, like Christina said. Fixed income invest most of their money in fixed income assets. And then balanced funds try to get the balance between those two. Christine, there's also the specific funds. Can you tell us about those ones?
So the specific funds, they tailor the investments on a particular sector or industry, and therefore like just heightening the diversification within a specific sector rather than investing in a diversified portfolio. And then they therefore just provide investors with exposure to a specific area in the market.
Okay, thank you for that. So I hope from that detailed explanation that Christine has given us, we understand what unit trust funds and the different kind of unit trust funds that exist or that we have in the country right now. So we'll just get then into the report. So the CMA does a quarterly report of the performance of the unit trust funds. So as unit trust funds, you're expected to provide data reports at the end of every quarter to the CMA, and they use that to compile the quarterly CIS report. Now, the report for quarter 4, 2023, which is the period between October and December, is out. And one of the things that stands out, Dennis, this is to you, is that the overall assets under management, or the AUM, grew by around 4.1, not around, exactly 4.1% on a quarter-to-quarter basis. So in Q3, the AUM was to 6.7 billion, and then in Q4, it goes to 215 billion Kenyan shillings. So what are some of the factors that led to this growth in the UTF's assets?
Yes, the growth in the unit trust funds has been significant, both in the short term and also over a 5-year period. As you mentioned, in Q4 2024, the AUM grew by, I will mention the year-on-year change, that was 33.6%, and also on a 5-year period, the annual growth rate stands at an impressive 30%, and we can attribute this remarkable performance from a variety of factors. First of all, the accessibility and inclusivity offered by the unit trust funds. They have played a pivotal role in attracting these investors with relatively low investment minimums. Most of them range between 100 shillings to 1,000 shillings even. And so the small scale investors have been able to access these professionally managed investment opportunities, and this has in turn been able to promote financial inclusion. Also, the unit trust funds, they offer competitive returns, and this has been instrumental in attracting investors seeking wealth generation over the long term or even the short term. Thirdly, we have the increased awareness and education efforts by the regulatory bodies, for example, the CMA and also the fund managers. For instance, this space you're holding today, I would say this is an educational effort. And so this has enhanced the investors' knowledge and confidence in the unit trust funds. And so as investors gain a deep understanding of these investment vehicles, we also see that the uptake for these investment products offered has also increased. Furthermore, the diversified products offerings by the unit trust funds has provided an access to a wide range of investment securities through these pooled funds. As Christine mentioned before, we have several funds. We have the equity fund, the balanced funds, and so all these investment securities have offered a manner in which the investors can diversify their portfolios. Also, let's not forget to mention the adoption of the financial technology, or fintech, and digitization within the industry, which has enhanced accessibility and ease of investments. We have the mobile payment platforms, which have facilitated immediate access to investments, and this has also contributed to the growth of the collective investment schemes.
Thank you for that detailed response. I hope you've taken note of what Dennis has said. He has talked about accessibility, the low investments minimum, the low minimum investments that is required. He's also talked about the returns. So especially, and when we talk about unit trust funds, while they're not primarily just money market funds, I think money market funds give the best example of why that growth has grown the way it has. They're accessible. I think most of the funds that offer MMFs have USSD codes that are accessible. At least as Cytonn we do. We have an app that you can access at any time. You can put your money in at any time and get it out at any time. There's also an increased awareness, as you have noted, and the opportunity to then diverse your investments. Dennis, just still on the same point, you've talked of a very remarkable 33.6% year-to-year growth of unit trust funds deposits. We also note that in the same period, or at least until Q3, or in Q3, bank deposits grew by 24.4%. Do you think this, what do you think about the outpacing? Why do you think the unit trust funds deposits grew as much as it did, and how do you compare that to bank deposits?
Yeah, I think a comparison between the different growth rates, it has several implications. The first one is perhaps there's a changing investment landscape. The higher growth in UTFs, the unit trust funds, suggest that there's a shift in the investors' preference towards the collective investment schemes, perhaps due to factors like the competitive returns. The unit trust funds, they offer higher returns than bank deposits, the low investment minimums, as I mentioned, and also the increased awareness. Also, in the future, we may see there's a potential for increased business fundings from capital markets. I believe the World Bank statistics reveal that in developed countries, so business financing, 40% of the business financing comes from banks, and 60% is sourced from the capital markets. But in Kenya, the scenario is quite different. The Kenyan businesses depend on banks for 95% of their funding, and only 5% are being raised from the capital markets. So with the outpacing of the growth in the UTFs compared to the bank deposits, perhaps you can see in the future there's a potential for increased business funding from capital markets as opposed to banks. And so with this in mind, I think there's need for continued enhancements of capital markets.
Okay, thank you for going into the details of that. I'll come back to you, Christine. Dennis has talked about diversification as one of the advantages of unit trust funds, yeah? And so from the report that was released by the CMA, which assets did unit trust funds invest in the most to diversify their clients' investments? And why do you think they invested in that asset?
So the UTFs invested most in money market funds, which was accounted for more than 0.5% of the total investments. The investment allocation in money market funds in the financial year 2023 equated to 65.5%, with 20.7% being in fixed income, equity being 1.1%, and balance fund being 0.9%. So you can see there's a very significant difference and a very significant gap between the different classes of the unit trust funds, and you can see the money market funds are significantly on top. And this can be attributed to the advantages of the money market funds. Money market funds, as you have mentioned before, they require very low minimum investments amount. You can invest from as low as 100 shillings to 1,000. Giving an example with the Cytonn money market fund, you only need a minimum initial investment of 1,000 shillings, and you can top up from as low as 100. And this cuts across a majority of the MMFs. they don't require that much money to invest in, and thus this encourages a wide range of investors to invest in them. There's also the idea of the returns. So as Dennis has talked about, if you compare the returns of the bank deposits and MMFs, so as of December 2023, the average deposit rate for bank deposits came in at 10.1%, and for MMFs was significantly higher at 13.3%. So you can see this difference, that despite the growth in the bank deposits, we can see that the traction in the MMF is growing and the penetration is increasing significantly. So there's also the varying liquidity. MMFs are very liquid in the sense that you can invest your money today and take it out tomorrow, or you can invest today. You can just invest and take the money out at any given time. So there's the ease of access of your funds. And I think this is a major factor that drives most investors to opt for MMFs. Also, another advantage that I'd mention is that they're not they invest in short-term debt instruments, and this makes them to have a lower risk, I'd say. So with that, you can see clearly why the MMFs have a higher investment allocation as compared to the other funds, and also this can be attributed to the increased knowledge and awareness on MMFs as compared to the other funds. So I think that's it in a nutshell. Yeah.
Thank you, Christine. Thank you for the details.
Joshua.
Christine has just informed.
Okay, just a minute. I've seen people already requesting questions, so I think they want to just dive in. So for you to dive in, I think you just have to wait until the end of the discussion, then you can ask your questions. So keep requesting, but I'll just hold you until we are done with the discussion from the panelists, and then you can ask your questions.
Okay, thank you for that, Brian. I think we'll now move faster in order to get to the questions and answer those burning questions. Now, Christine has talked about the popularity of money market funds. Now, Dennis, I want you to take us through the assets that the unit trust funds put their money in. I can see that at almost 47% of the investments by unit trust funds was put into government securities. So that's the bonds, the T-bills, infrastructure, but the different kind of bonds and the government papers. So why do you think this is, and why do you think the government securities first of all were that popular in Q4?
I believe the government securities were popular in Q4 primarily due to their perceived safety and stability, and this holds true especially in times of economic uncertainty or during tough economic times. And that was certainly the case last year. We had a few issues with the economy, the high public debt, the elevated cost of living. We had the exchange rate pressures, global economic uncertainties with all the conflicts going on. So during times like this, investors likely sought the safety and the security offered by government securities to protect their capital and preserve their wealth. Additionally, we mentioned the government securities typically offer relatively attractive returns compared to other low-risk investments, making them appealing to investors that are seeking to balance between the safety of the investments and also the yield. So yeah, that's why I think the government securities were very popular.
Okay, interesting. Like I mentioned, government securities were at around 47%. Fixed deposits had allocations, or UTFs invested around 34.5% of their cash or their investments in fixed deposits. And then cash and demand deposits stood at around 10.7%. Something that was very interesting was that to see, I looked at offshore investments were almost third last at just 0.4%. So unit trust funds did not at all trust offshore investments for their cash. And this is not to preempt the focus they're currently doing, but from the survey we had from on pensions, offshore investments had the highest returns. They gave returns of around 18% in Q4. So do you think this was a missed opportunity for UTFs, Dennis?
Yeah, I mean, it looks that way. I mean, if you combine those two facts, the fact that first of all we had very low allocations with in the offshore investments. I believe in 2022 and 2023 we had the allocation ranging between 0.4 and 0.6%, and also as you mentioned the return, that 18% return, it certainly looks like a missed opportunity. However, it's important to realize that the fund managers, they typically make investment decisions based on an intensive analysis of various factors, factors including the specific goals for their funds, their risk appetite, and also the investment strategy. And so with the information provided, it doesn't explicitly state the reasons for the limited allocation to the offshore investments. And so whether it was a missed opportunity really depends on the specific investment objectives. As I mentioned, there is consideration, also the market dynamics to the fund. So I can't really say conclusively whether it was a missed opportunity.
Very well put. If you're looking at it in terms of the returns that the UTFs offer to the clients, then it was definitely a missed opportunity. But from the myriad of factors that you talk about, maybe this is something they can look to towards looking into Q1, maybe some proper analysis, what caused the offshore investments to give the kind of returns that they did. And from the look of things, it was because of the currency depreciation. So again, that's an analysis that ETFs will have to continue to make to ensure that they continue providing returns as high as they should, or as higher than they already do. Back to you, Christine. What's the current number of collective investment schemes? Were there any additions in the quarter or during the year? Can you give us an update on that?
So currently, that is as of the end of the financial year 2023, there were 36 collective investment schemes, and this was an increase from 34 that was recorded at the end of the financial year in 2022. And at the end of the last quarter, before the last quarter 3 2022, there were 31 schemes, sorry. So out of the current 36 schemes, we have 29 of them which are active, while 7 are inactive. So like an example of maybe the inactive ones are maybe, I don't know if people have heard of them, but the first Ethical Opportunities Fund, Adam Trust Fund, and Masaru Unit Trust Fund, and others. Yeah, we also have Standard Investments Bank and Amka Trust Unit Trust. They all remained inactive by the end of the financial year 2023.
Okay, just so you say there are 36 ETFs. What does that do to competition? I mean, is competition a good thing for ETF?
Yeah, competition is always a good thing in any market. So definitely competition is a good thing, and it's a good thing because it encourages good returns. You can see from the MMFs, the money market funds are constantly competing to give the best returns to investors. And this is as a result of competition, because if you are number 3 today, your goal is to be at the top. Or you can see that the other funds that are coming up, that probably, like, let's say in the quarter that just ended, in the quarter 4, 2023, we had the top 5 MMFs. We had Gen Africa at the top. But now, if you look at the yields, we can see that Etika has constantly been at the top. And this is as a result of competition. They are constantly competing to give the investors better returns. And this benefits the market in so many ways, because a competitive environment generally leads to increased economic growth. And also, if the number of unit trust funds continues increasing, this means a wide variety for investors. Definitely, it means best returns, good returns, and also just where there is competition, the market thrives.
Yeah, so thank you for establishing that. The competition is good, and we have to encourage more fund managers or UTFs to join the mix. It encourages competition, like you said. So currently, as we speak, there are 16. There are just around 3 money market funds that are giving returns of above 16%, and the same rate will like comparing MMFs to T-bills. The 91-day T-bill is currently at a rate of 16.6%. So with just 3 MMFs giving over 16%, and the 91-day T-bill still giving the 16.6%. Then it's just like a talk. Why would someone still go for MMFs? Why would someone still go for MMFs as opposed to the T-bill? You could just like reiterate again why MMFs are important.
Yeah, for an investor, when you choose between an MMF or a bank deposit, it's important for you to think about the other factors rather than just looking at the yields. So the MMFs are good investments. First of all, because as we mentioned, the liquidity, money market funds they're highly liquid. The money is invested in these funds can be withdrawn within even the next day of investments. But with can you pardon? What was the question between MMFs and bank deposits? What did you say? The MMFs
and the 91-day T-bill.
Okay. So as I mentioned, liquidity for the T-bills, the government treasury bills they're less liquid. They have certain locking periods, let's say 91 days or 182 days or 364 days. Obviously, with the exemption of the secondary trading, but the point is the money market funds are more liquid than the T-bills. Also, we have to talk about the feasibility between money markets and the 91-day T-bills. In Kenya, I believe the minimum investments for you to be able to invest in a 91-day T-bill is, I think, 100,000 shillings. And for most of the small-scale investors, they are unable to invest in the government securities. And so in that case, I think it would be more suited to them to just go for a money market fund, because it ranges between 100,000 to between 100 to even 1,000 shillings. That's the minimum. So yeah, liquidity and feasibility are a couple of the factors that make the money market superior to the T-bills.
Okay, thank you for that. Just lastly, I'm also saying we did an analysis on the money market funds money market funds AUM as compared to other competing products. So the AUM of money market funds, we also looked at the total deposits for banks, pension funds, SACCOs, or CIS, not necessarily money markets, UTFs, and real estate investment trust. And it is very interesting to see that, for instance, our bank deposits as of September stood at 5.5 trillion. Pension funds were at 1.7 trillion. SACCOs were at 1 trillion, and CISs, Heather Christine, I'm saying, we looked at the MMF. We looked at the MMF AUM and compared it to other competing products. We compared it to bank deposits, pension funds, SACCOs, and CISs, and it was clearly low at just 0.0 trillion. The AUM is dwarfed by bank deposits at 5.5, pensions at 1.7, and SACCOs at 1 trillion. So what are some of the things that can be done around the capital markets? What are some of the things that we do recommend that can be done to boost the capital markets. And this, by the way, is not to say that there there has been no improvement. Like we have noted before, the AUM has grown enormously by almost 33.6% from last year to the current 215 billion. And also the money market account, mobile money accounts have been growing steadily to 47.7 million in Q4, or previously to around in Q4 2018 to around 77.3 million in Q4 2023. So it's clear there's been an improvement. This is something that we need to build on. So as a team, Dennis and Christine, what are some of the recommendations that we can put out there for the capital market, so to improve on UTFs?
Okay, so as you've mentioned, there's definitely potential for growth, and there are several actions that can be taken to stimulate the growth of ETFs in the Kenyan capital market. So I'd say one major point is to encourage investments of UTFs from diaspora remittances. So as you know, the inflation in the US and the UK has been easing recently, and this has definitely led to the value of diaspora remittances to increase. The remittances inflows from Kenyans living abroad recorded a 4.3% increase to $372.6 million US at the end of the financial year 2023, and this was from the $357.3 million US that was recorded at the end of the financial year 2022. However, there was a diaspora remittances survey that was carried out by the CBK back in 2021, and this was the first of that survey. And from that survey, only 8% of the respondents were aware of investment opportunities in unit trust. So from these statistics, there is definitely a gap that necessitates the investments of UTFs in UTFs from diaspora remittances. And therefore, maybe actions that can be recommended is to unlock the diaspora investment in unit trust fund, is to raise awareness on the benefits and advantages of these investments, and design UTFs specifically catering to the investment needs and preferences of the diaspora community. And there can also be partnerships with the remittance service providers, so that there are solutions that are integrated for seamless and direct investments in UTF funds, leveraging existing financial channels used by the diaspora. So maybe I'd ask Dennis to maybe add a point on that, on the recommendations to increase the UTF growth in Kenya.
Yeah, I'd like to say, so to improve the financial inclusion, as I mentioned, for the small scale investors who are unable to invest in other investment vehicles, for example, the T-bills, we need to improve the investor education and awareness. We need to have initiatives aimed at educating the public about the unit trust funds and their potential benefits. And this will increase the awareness and understanding that may be hindering the adoption of the funds. And so increasing leverage of technology for education and distribution. Also, we need to open the door to non-bank trustees for unit trust funds. So at the moment, only the banks can act as trustees for the unit trust funds, and this presents two significant challenges. One of which is banks compete for investors' funds with the very unit trust funds that they oversee, and so this creates a potential conflict of interest. In addition, banks may lack the expertise or incentive to manage complex financial products, within this UTF, and this restricts the investment options primarily to safe but low-yielding assets. And so, to alleviate this, we need to allow non-bank entities, for example, specialized trust companies, to act as trustees, and so we can address these concerns and unlock the full potential of the unit trust funds, and thus fostering their growth.
Thank you, Dennis and Christine. I think they have noted some very critical points. That the first, there's potential with diaspora remittances. We can leverage on that, or we should actually leverage on that with more education, get the people out there working outside there to come and put their money in our UTF. Dennis has also pointed out the point of conflict of interest within trustees, where we have banks supervising unit trust funds, and these two entities should actually be in competition. So that is something again that we recommend that should be looked into, so as to continue improving the unit trust funds. And finally, a point that they have all talked about is financial education, which I think this space is a good example of. So these conversations need to continue. These conversations need to be heard and held. And on that note, I want to thank all of you for being here. Thank you for listening to our discussions, and we will now open the floor for questions regarding the presentations that we've made. And I noticed that most of those questions will be in and around or regarding MMF. So we'll also have one of our team members that works on the money market to answer some of your questions. So you can go ahead. If you have a question, you can type it on the chat, or just raise your hand, ask for the speaker, and you'll be given.
Okay, so before I saw Saina asked to ask a question. So, but before that, there's Martin who had asked. I think he has left there, but he does. How long does one invest in a money market fund? Saina, for now you can. Saina, you can request the mic again because I saw you dropped. You can just request and maybe you join in. But Martin had asked, how long do you invest in a money market fund?
Thank you, Martin, for your question. I guess the length you're asking for is the period in which I don't know what you mean by the length, but to answer this, I'd say there is no limit on how long you can invest on a money market fund. You can invest for as long as you want. Your deposits do not expire. They continue earning interest for as long as they're there. And on that same note, we like to encourage people to hold their money more in money market funds, because the more you hold the money, the more benefits you get. If you know about the concept of compound interest, I think that's the whole basis or premise of investments, that you want to leverage on compound interest. So when you put your money there, while it's not a bad thing entirely to use your money market account to pay for bills, because that's one of the advantage, but for you to get the real benefits, or to see the real compounding effect of compound interest in your deposits, it's good to leave your cash or to leave your money in a money market for a long period. So yes, Martin, there's no limit for the period in which you can invest on money market funds. I hope that's well answered, though he's not here.
Okay, thank you for that. Saina, if you can just request the mic once more, then we can allow you to ask your question. So far, that was the only question that I saw on the chat. Yeah, there are no other questions. So we give Saina maybe some time. Then okay, Lee requested the mic. Just a minute. Lee, go on.
Thanks, Brian, and thanks, Joshua, for organizing this forum. It's been very informative. My question would relate to innovation. We have seen money markets coming up and investing in technology in terms of having wallets that enable users to just invest instantly wherever they are, and also they can withdraw whenever they want. What about innovation in the aspect of the quality of investment portfolios that UTF invest in? By this, I mean, you can see UTF, especially money market funds, they heavily invest in government bonds and T-bills, which currently they are leveraging on the high interest rate that the government is borrowing at to offer a similar high interest rate to their customers. Should there be a call for fund managers to just come up with new investment portfolios or special type of investment products. We recently saw rates which for some reason they haven't been that performing. Should we see other sectors such as, let's say, agriculture, let's say technology, just for fund managers coming with these special funds that at least will give buffer to this high interest rate? For example, for an instance, if the government bonds or T-bills come down in terms of the interest rate, does that mean also uh, the rates that you offer clients will also be affected? Yeah, so that's my question, Joshua.
I think that's very well noted, and it's what we were talking about with Dennis back when we were looking at the opportunity, for instance, that fund managers missed when it came to offshore investments. I think it's true that we need to come up with more innovation and look for different asset classes. There are digital currencies that most money market funds are still afraid to explore. You talked about specific sector investments. I don't see most of that still being done. And like you've said, it's a challenge that unit trust funds must now accept, and fund managers must start looking towards, being more innovative towards investments. But again, we're not at the point of, for instance, on money market, these are regulated funds, and part of regulation means there has to be some safety net. So you give that safety in terms of diversification, but also there's a limit to the places that you can invest the money. So balancing that, there's a need to again balance the regulations, balance the needs of safety in our returns, and that is something that's a challenge that, like you said, it's right. Fund managers must just take it up and go into it. And also, finally, I think there's a lot of research that still needs to be done. If you're talking about safety, for instance, when the World Coin came up, it's not something that a fund manager would conclusively have data and conclusively decide that I'm going to take my client's money and put it into this kind of investments. So yeah, there are still challenges around that in terms of regulation, but the need of innovation, like you said, still exists. And I think you're very right on that. If either Dennis or Christine have anything to add onto that point, then you can go ahead. Yeah, so I think Lee, that answers your question. You're very right. There is need for more innovation in terms of diversification into more asset classes. I think just finding the balancing, doing the balancing act, doing a regulation, proper research, and then combining the two together will definitely work out for that. So thank you for your question, Lee. Unless you have another question.
Thanks, Joshua. That's well put.
Okay, thank you.
Okay, I have a question, and this coming from me. That's Brian. Basically, what do you think? What are your expectations for the overall performance of unit trust funds this year? If you look at the given economic conditions and the market outlook, what do you think will be the performance of such of the unit trust funds that exist in 2024?
Thank you for your question, Brian. Like I think we had mentioned this before, the performance will depend on a number of market movements. You've seen that most of the investments by unit trust funds are put into government securities and fixed deposits. So that again is dependent on the rates. So for instance, right now, the CBK has a rate, the CBK rate is at around 13%. We expect, there is an expectation that after the Fed cuts its rates, that rate will probably come down because the governor was talking about it anchoring the exchange rate, and we've seen what has happened to the exchange rate. So there's a probability that the rates will start coming down again. So with investments in government securities, ideally, it will just depend on the market movement. We don't expect much on the fixed income side, but the equities from our market outlook, we are more neutral on it, but more bearing towards the positive side. We expect that the markets will come back stronger. The valuations of the companies that were currently low will encourage movement into the into the market, and with the higher returns in the equities market. So to answer your question, it will basically depend on what the markets do or how the markets move. We can't say for sure that this is how they will perform, but we see a positive indication for the year. Or maybe just Dennis, Christine, anyone, if you have something to add on that, you can do.
Yeah, just like you've mentioned, Joshua, the UTFs are like the performance inherently depends on the volatility of the underlying assets that the portfolio consists of. So the performance will be greatly determined by how the market performs. So despite the positive indication, as you mentioned, we cannot say for sure how the UTFs will perform because of how volatile the market is.
Yeah, I think that's right. I hope your question is answered, Brian.
Yeah, thanks. And somebody just wanted to remain anonymous, and this is a question. What advice would you give to investors looking to diversify their portfolios with unit trust funds in 2024, considering their risk tolerance and investment objectives? Because you mentioned there's various types of like unit trust funds. I think you said there's money market funds and I think income funds. Like, so the question is, what advice would you give to an investor looking to diversify their portfolio with unit trust funds in 2024, considering their risk tolerance and investment objectives?
Maybe I can take that question.
Can you hear me?
Yes, you can hear you.
Okay, so somebody wanted to remain anonymous, and the question was, what advice would you give to investors looking to diversify their portfolio with unit trust funds in 2024, considering their risk tolerance and investment objectives?
Okay.
Brian, as I was saying, Dennis, go ahead.
Yeah, I was going to say well, it really depends on your risk tolerance. So if you're a risk averse investor, your best bet would be the money market funds, so because it does strike a good balance between stability of the security of your investments and the yields. So yeah, if you're a risk averse investor, then the money market fund would be your best bet.
Yeah, I agree with that. But okay, not but. I think you also asked and answered the question really well. Just look, before you make the investment, understand yourself. What is your level of risk? Are you willing to take any risks? And also your position, your goal. What is it that you want to achieve by the end? Or by the end, you could take maybe a year, take a period, and then have a specific goal and see which of these unit trust funds would best make the best fit. But like Dennis has said, if you're risk averse, then advice would basically be the money market funds. I think money market fund would be where you put your money. Let it generate for you some income as you think of even more, evaluate yourself and see whether you're ready to make even more risky investments. But money market is the safest best to go for if you're just you're not looking to go into too much risk. And we mentioned a lot of advantages for the money market funds. You could maybe just go back, listen to the space and pick out the ones that we talked about.
Okay, thank you so much. Bikeman Chronicles. So, but at Baro Isaacs, maybe you can ask your question. I just added you to the speaker section.
Okay, thank you very much. My name is Bikeman Chronicles. I'm a finance professional and I'm also a biker. I want to ask, compared to unit trust funds, do exchange traded funds perform better? Do they offer better yields, or do they have more or less risks?
Oh, thank you, Biker. So if I had your question right, you're asking if special funds offer higher yields, or what's their profile in terms of risk as compared to money market funds?
Yeah, especially in Kenya.
Yeah, so they do. Like we said, money market is a safe bet. So it gives you currently the rates are high at around 16%. But think of it this way. If you're going to invest in real estate, for instance, or one of the sector or sector-specific funds will be real estate. So real estate, of course, is a risky investment, but the returns are going to be much higher, or normally higher than what you get from a money market fund. So part of the safety of money market funds is that the yields are lower than what you'd get in a sector-specific fund. So that's right. If you have anything to add, then Shayla.
That's okay.
Hi,
Okay,
how are you guys?
Okay, Saina, thanks for coming back up. Maybe now you can just go ahead and ask your question.
Okay, my name is Saina. I just wanted to know what's the withholding tax rate on the interest earned of a money market fund?
Yes, Saina, the withholding tax currently stands at 15% of the interest earned.
Mm-hmm.
Yeah.
So what's the rate? What's the current rate?
The withholding tax, it's 15%.
Okay, 15%. Okay.
Yeah.
And how is that deduction usually made?
So the deduction is made on the is done on the interest that you've earned.
Mm-hmm.
So the calculations are done, and then on your interest before it's paid out, the 15% is deducted and remitted to KRA.
Okay, got it. Thanks.
Maybe. Okay.
You wanted to say something?
No, I just wanted to see if anyone has anything to add on that. But I think that's basically it. It's just 15% of the interest that you've earned from your investments.
Okay, thank you.
Thank you for your questions. You can type in your questions in the chat if you feel like, or just lift your hand. Brian will see it.
Joshua, I can't currently see an hand or a question or anybody just requesting the mic. So I feel like most of the questions are done. Yeah.
Okay,
Unless
thank you guys for tuning in. If there is no more questions, I'll just have my panelists, our panelists, give their last marks, and then we can close the session. Their last remarks. We start with you, Shayla.
Okay, I'd also like to thank everyone who has joined in on the discussion. Thank you for engaging us and for asking questions. So I hope the discussion has been informative and that you've gained a lot. And I hope that this will encourage you to invest in the unit trust fund so that you get you make good use of your money. Yeah.
Yeah, I'd also like to thank you guys for sparing your time to listen to us. I hope this session was educative, and perhaps now you have a good understanding of what unit trust funds are. Also, just to add, this discussion was based on the report we did. So for more information, you can visit cytonn.com is it research? Yeah, cytonn.com/research, so you can read more on this issue. Yeah, that's all.
Okay, thank you everyone for joining the space. This space is recorded, so you can still go back and listen to the discussion that was done before maybe you joined in. Thank you everyone, and have yourself a good night.